Hey guys, good afternoon, everybody. Today is Tuesday, July 26th. It is 2:59 right now. Our mentoring session is scheduled for 3 o'clock, so I'm going to go ahead and set this room up real quick, and we can get started with our session for today. So let's update a few things here, and then we should be good to go. All right, so it's good. That looks good. A few more things here. All right, so let me get this link sent out to you guys here in the premium. All right, cool. Link has been sent out, guys. There we go. Give it a few minutes for people to make their way in. All right. All right, guys, I got a few more minutes for people to join. If you guys have any questions, feel free to put your questions in the chat. We can cover whatever you guys would like to cover today. But for the most part, I will give it some time for people to continue and join. So we're waiting for that. I'll give it another minute for people to join. But if you guys have questions now, go ahead and put them in the chat. I don't have any questions lined up right now. So if you guys have anything specific, feel free. I know some people wanted me to cover the breakouts, just do a full analysis of like how we're applying them, how we're identifying what's good and what's not, and which direction to take. So I think that's probably going to be one of our main things to cover today. And then basically whatever questions you guys have. All right, cool. People are still making their way in. Hey, Matt, how's it going? All right. So good afternoon, everybody. Today is Tuesday, July 26th. It is 3:02 right now. We're scheduled to start this mentoring session at 3 o'clock. So it's still early. I think people are going to make their way in as we progress through the session. So if you guys have any questions, feel free to put your questions in the chat. We don't have any questions lined up right now, but I think a few people were asking me if I can go back and review the breakouts from today and yesterday so that you guys can, fully understand how we're applying them and reasons for taking certain trades. So yeah, if you guys have any questions, feel free to drop them in the chat. We don't really have anything else specific, so that's like the main thing we're going to cover today. If there's anything else that you guys need help with, or help with your trade psychology or strategy or anything really, I'm here to help you guys out. So all right, so I will go back here real quick to yesterday's breakout, and then we'll start off with that. And then as questions start to roll in, we can cover whatever questions you guys have. Yeah, sure. I've had, so which 3-minute strategy are you referring to? Because there's a lot of them. So if you could let me know which one you want to cover, we can go into that in detail. The daily. Okay, perfect. So we'll cover that. Actually, we'll cover that first. I think that'll probably be best because obviously I want to cover whatever questions you guys actually have before we deep dive into anything here. So Let me just go over here real quick to 630. I'll look for the actual entry, which was right here. So question from DJ. I'm gonna answer DJ's question real quick. DJ's asking, hey Sean, quick question about the FTMO Quick Trade Manager. What points do you enter for trailing stop? For TP stop loss, I do 1030. So depending on which one you know, which strategy you're applying, DJ, you can use, I mean, if you're doing like the quick scalps, you can do that. You would just put for your stop loss, instead of 30, you would put 3000. It's basically similar to the DOM, so it's like an extra zero. Yeah, no, you're right. So that's what you could use if you want to just have it set. I think if you were to have it set like that, the trailing stop would be kind of useless because you know, depending on where your trailing stop would be, you would probably hit your TP already by then. So the trailing stops is more so used with like or what you can do, DJ, actually, is you can use you can put no TP if you want, because you can just have a stop loss where it's already set. So you'll have a stop loss set, but as price moves down into profit, it'll automatically move your stop loss in profit. So if you want to do that to like maybe go for a bigger move instead of the, you know, 100 pips that you normally go for, you can do that. So you can set your stop loss to your typical stop loss of 3000 pips or at 3000, which is 300 pips. And then you can have your trailing stop at 100 pips, or you'd put 1000 in there. So basically what would happen is if you're taking like say a 1 minute trade, I'll just look for an example here. Let's see if we can find one here. So say for example, you're taking like a double body right here, right? So this is what would happen if you have your trailing stop. So what you would do here is, you know, typically you'd have a TP stop loss of 100 pips, right? Say for example, on this one, you don't have a TP. So what will happen is when this moves down 100 pips, so say you have it set to 1000 right here, right? So when you do set that to 1000 in your trailing stop, as soon as price makes its way down to this point, so it's not going to move yet, but once it makes it down to this bottom area right here, hasn't done that yet. Okay, so like right here, right? See how price dropped below here, DJ? When this happens, your stop loss is going to move to break even. And then as price continues to move lower, like say, for example, it's down here now, right? At that point, your stop loss is not going to be right here. So it's just going to keep trailing it. So if you were to just leave it like that and you let it run, as this moves down even lower, this would just keep following it like that. This blue line is going to be your stop loss. I'll color it red so it's easier to see. So this would be your stop loss in profit. And then as it continues to bounce around, you can see right here, it kind of pulls back a little bit. And then it drops again right there. Now your stop loss is right there. Because it just follows it by 100 pips. So like basically whenever it goes down, it just keeps the stop loss like 100 pips from where price currently is. And it drops even lower right there. Oops, drag the wrong thing. Drops a little lower right here. And then your stop loss just keeps trailing it. And you don't have a TP, so you're never going to get stopped out until it actually pulls back and stops you out. So it just keeps following it. Price drops a little lower right there. Trails again right there. Drops even further, and it'll just keep trailing it until it hits the stop loss. Keeps doing that. And then you can see right here where it's kind of pulling back. This is where you get stopped out. So you get stopped out in profit right over here. So this is basically how it would trail your stop. As long as it doesn't come back up and hit your stop loss right away, it'll just keep dropping. So instead of locking in 100 pips, you would have locked in 280 pips. So this doesn't happen every time, but this is how you would you'd have it set up. So let me scroll up real quick. Yeah, exactly, DJ. So if you were to set it to 1000 in that little box there, it would trail it just like I did right here. 1000 number in numbers, but technically 100 pips. So it just keeps dropping and follows it as it just trails it as it moves lower. So you're asking, did you put a trailing stop on your? Yes, I did. So since the market has been choppy, I've been using the trailing stop. I did use the trailing stop for the breakout today, but my trailing stop was a little wider. I kind of screwed up. I should have probably had it closer, or I had it tighter actually. Actually, no, I didn't really screw up. It was actually a good move what I did. Let me go over to the breakout for today real quick. So the breakout, oh, this is from today. Here, let's go to the breakout for today real quick. Oops, wrong thing. So let me go over to the breakout from today. So it was actually a good idea that I made the trailing stop closer because the market was so choppy this morning. So what did I take? I took the opposite move here. So I took the sell. Let's go here real quick. Okay, so this was a breakout right here. 6:30. What we did was we entered late, if you guys remembered. So this was the breakout right here. We did the opposite. Instead of taking a buy, we just waited for it to pull back, and then we entered it as it came down. So like for me, this was the set TP stop loss right here. It entered my trade at this point, and I think my trailing stop was like 150. It was pretty close. So basically, when price pushed down to this point right here, at this point, or yeah, this point down here, because it pushed down a little further, it moved my stop loss and profit. Oops. It moved my stop loss and profit to this the top of this blue line. So basically, this price dropped, stop loss is moving profit. This was now my stop loss right here. So as price continued to move a little lower, like this right here, it dropped a little bit. I think I got caught in some slippage, honestly. That's why I kind of screwed over here, because I was supposed to make more profit. And then my stop loss did get moved a little closer. And then when price swung back up right here, this is where it kicked me out. So I technically locked in. Yeah, I should have made a lot more profit off this. I was technically locked in 1,300 pips, but I think what happened is when I made the entry here, I entered kind of late. So I actually entered like a little farther down, and that's why I didn't get this much of a move. My profits from today, I just locked in. Let's see, I locked in like 490 off the copier. So it kind of cut me short. I don't know if it cut me short because of the slippage going up, or if it cut me short on the slippage going down. Because like from the entry, or if it was from the exit, but either way, it did cut me short because I only locked in 490. So that would have been like, it closed me out like right here somewhere. So this is how far I got down. So I don't know if the spread was wide or there was slippage, or I mean, I don't know, whatever happened. The market was moving fast, so it was probably the slippage. I technically was supposed to get out right here, but I think when it closed me out, it just pushed up really quick, and then it actually closed me out up here. So that's how I got out of the trade there, and I only locked in like $500. So, and I only know that because I locked in 500, so that's only 50 pips. Because if I locked in a 10 pips or 100 pips, I would have locked in at least 1,000. That's why I know how much I locked in off that trade. But that's pretty much how I did it. I think if my trailing stop was wider, I'll just try to measure and see. So if I was using my normal trailing stop, I mean, it wouldn't matter. I still would have gone screwed either way. Either way, I would have gone kicked out right here. So I would have made less profit actually. But yeah, that's pretty much how I applied the daily. You see, question from Pat. So Pat said, so then for the breakout, can you set? Yes, that's exactly what I do, Patrick. Pat. So basically, I have it set initially at 500 pips, but I also have a trailing stop. So when my trailing stop moves, it moves this in profit. So I initially have a fixed TP stop loss, but as soon as it moves into profit, it'll trail it. So I have the opportunity of catching the full move or getting stopped out, but I also have the benefit of it trailing my stop if price started to like drop heavily. Like I think if I waited a little longer, which I mean, it could have been solid too. So if I waited and I didn't enter like right there, or if I double dip into it, right? Because sometimes I do that. If I double dip into it when it came back down this time, maybe not that one. It was like when it started to drop. So not that one right there, but I think it was the one after this. Okay, so this part. If I double dip right here, this is where I would have made the biggest bang for my buck. I probably would have hit full TP because my trailing stop was 150 pips, right? So like right here at this point, when price dropped below here, my stop loss would have been in profit. I think if I got in for a second or third entry right here, this is where I would have made the full TP because at this point, price never came back up. It kept dropping. And then as it dropped, my stop loss, which would have been right here, it would have trailed it down to this point, and then stop loss now would have been here. The only time I would get pulled out is if price swung back up to this point. So you can see right here on this next candle, it drops even further and it still doesn't push up. So I would have just still been in the trade right there. And if it kept pushing even further right here, this is where I would have, I either would have hit full TP if I didn't turn off my profit target, or I would have gone stopped out right here in profit. So either way, I would have made pretty heavy profit, either down here or a full TP. And that's pretty much how I've been trading, just to be conservative and careful. Because you still you still got to be careful. Like the market is moving kind of choppy and there's no clear direction. So I'd rather get out with some profit than get out with a loss or get out with nothing, right? It's just weighing the risks in the market for that particular time. And lately it's just been kind of choppy. It just hasn't been a smooth move. So that's why I've been using the trailing stops. But when the market starts to move smoother, so say in the fall, when the market starts to smoothen out, when the bigger players come back into the market, like the whales and whatnot, at that point, then I'll probably just let it run. I probably won't even use the trailing stop because it's going to hit TP or stop loss, and I'm going to trust it enough to even if I do lose a trade, I'm going to make it back on the next day. So that's exactly how I do it. Let's see, Pat said, got it. That's what I thought. Wanted to make sure. Yeah, no, definitely, Pat. He said, yeah, the later entry is what I was envisioning for the 5,000. Yeah, no, definitely. This is like best case scenario. And this is usually how the breakouts happen, right? The breakouts don't usually have this choppiness here. Typically, if you were to enter a breakout like this is where it just drops straight to TP. But lately it's been so choppy where I'm just like, man, what doesn't make sense for me to risk it. I'd rather lock in. Because the thing is, if I'm taking a 10 lot and this pushes down at least halfway, right? Because you guys have seen this thing pushes down halfway sometimes. If this was to push down halfway to 500 pips or 25 points, so push down halfway right here and it just drops a little like it did up right here, I would have still guaranteed myself 150 pips, which is 1,500 profit. So it's just me being safe right now. It's because of the market conditions. We're in the summer, so it's not really the time to really take anything too crazy unless the market's actually moving. But you guys have seen over here, it's been super choppy. If you look back pretty much to the market this entire day, here's a clean chart right here. I want to mark up how the market moved for the entire day today. So we got 6:30 to 8, which is basically our live session. 6:30 is right here. 6:30 to 8. And then basically 8 to 10. You guys can see there's literally no direction. And then 10 to 12 over here. And then basically from 12 to close. So the mid-market reversal over here did play out, but everything else kind of doesn't make sense, where it was going. Right here, 6:38. This is when we traded on the live. It was just a huge range. Price just kept going back and forth between, this high and this low right here. It didn't really do much. It kind of just went back and forth. And then you can see over here, once we got off, price pretty much did the same thing. It dropped initially, then it just ranged and then corrected back up. So it was really just another big range. over here, this is what I was referring to earlier this morning. I said, if you guys want to trade, probably trade later around 10, because you can see the mid-market reversal happen. So even though it's ranging from like 6:30 to like 10, it started to choose a direction right here. This is a mid-market reversal down in this direction. And then over here, of course, back into a big range. So yeah, markets just isn't moving too smooth. Typically, you want to see this move directional and then consolidation, then mid-market reversal. But lately it's been nothing, and then mid-market reversal. So yeah, you guys can always make adjustments as the market conditions change. So I think that's it for that. If you guys have any other questions regarding anything, really just put it in the chat. But I'm going to scroll up and go back to iPad's question. So iPad wanted me to cover the 3-minute daily. So the 3-minute daily, which is right here. I'll just put the requirements up here. I don't trade the 3-minute daily, so I don't really have data on it, on like how to apply it, what TP stop loss to use or anything like that. We had this pending version of it, but we never really tested it enough to finish it. It's still unfinished and in progress. We didn't figure out the sweet spot was, but it seems like John kind of came up with the sweet spot. So let me check what he put in the chat earlier today. John said for the 3-minute strategy in the past 32 days, he took, if you were to only take the counter trend trade, the 3-minute would have given you a 79% win rate if you're using a 300 to 300 TP stop loss, a 67% win rate if you were using a 500 TP stop loss. And then if you wanted to do a negative risk to reward, which was 300 TP, 500 stop loss, the win rate would be 87.6%. So he trades it a little differently. Basically, he'll trade it opposite of the trend meter here. I haven't tested it myself, so I can't tell you exactly how well it works, but from John's data, it seems like it works very well. So I'm going to show you right here how the actual daily works, and then I'll show you the comparison to like what John does. So like for me personally, this is basically just a 10-minute, but it's done on a different time frame. So if I was to look at this right here, this is just going to be the bare bone application of the strategy. You'd confirm the bias. There was no bias today, so technically you couldn't take this trade if you were applying this specific strategy, right? Because you can't get past the first step. However, if you want to confirm, if you're able to confirm there's a bias and say it was bullish here, then you would just look for the first valid K2 momentum signal. Market open over here at 6:30, so you're looking for the first valid signal after that candle, which is right here. And that first valid signal would have been right over here, right? This one's invalid because it's a sell signal with a green candle, so it's not one that someone would take. But in this case right here, you could have taken it the other way. And that's going for like John's strategy. So using the original strategy, there's no way to apply it because there was no bias today. I just remembered because we traded this morning. But if there was a bias, you could have taken this for a buy. This would have been the entry. But since it's not there, another way that you can apply it is you just don't confirm the bias and use the confluences here instead. There's a lot of different ways to apply this. I just don't apply it myself. I'm just showing you different ways of applying it. I'm not sure if you're familiar with applying it, iPad, but this is like the #1 step that nobody follows. I don't get it. Like I go over this every day, like over every strategy, but for some reason people never follow the strategy right here, confirm bias. So I think if that's the case, then if that's your problem too, you can just ignore it as well. And then you just use the confluences here to confirm it, because you're going to have to confirm bias either way. So looking at this right here, just say if you just ignore the first step, like majority of people. Now we do have an entry here still, but what you're looking for is to confirm whether you want to take it in the direction of the actual trade or if you want to do the opposite. For the daily trades, it's a 50-50 trade, right? Not necessarily 50% chance or probability, but the trade will either lose or it's going to win. That's what I mean by 50-50. Like you have an opportunity of winning the trade or you have an opportunity of losing. You're not going to have an opportunity where it's just choppy and you don't win or lose. You're going to know if you win or lose like right away. So with this right here, if you were to ignore that bias and you wanted to use the Confluence checklist, we'll go over here and we'll just identify what we were looking for. So overall bias right here is not present. It was neutral today. Current trend, it is bullish, right? So this is going to fit the requirements because, or not the requirements, but one of the confluences here. So we're going to leave that alone. For number 3, you want to confirm a high-low continuation and make sure it's not overlapping. These high lows over here, since you're looking for a buy, you're going to be looking at the lows. Looking at these lows over here, these do not fit the requirement because this low over here overlaps this one. In order for it to not overlap, this one would have to be lower than this one. So with that said, third requirement is not met. For the 4th requirement, you want to confirm the high-low candle reversal. Since you're looking for a buy here, you want to look at the most recent low and confirm that this is a green candle. This is not a green candle in the 3 minutes, so that's not going to apply. We'll go in the 10 minutes to confirm here. The low over here is not going to be this one. You have to go back to the previous one, which should be this one right here. This low is not a green candle. So with that said, we're also going to be skipping. We're not skipping, but we're going to check this off as not applying in the confluences. Lastly, you want to confirm that the previous low over here has additional strategy confluence. So looking at this right here, this is a V3, so that's going to apply. Looking at the confluences, you'll see here that 3 of them do not apply, while only 2 of them apply. So which one's going to weigh in favor of the confluence? With not enough confluences here, odds are this trade is going to lose, right? So instead of taking a buy, I personally would have done the opposite and taken a sell. Fixed TP stop loss. I use 500 pip TP stop loss, but John's his back test, he used a couple different things. He uses a 300-300. He has a 79% win rate. For the 50-50, 500-500, he has a 67% win rate. So it's a big difference. So you might want to use a smaller TP stop loss since it's a smaller time frame for the 3 minutes. So if you were to apply this 300-300 and you let it run, you can see here that it comes down and hits full TP. If you were to do the 500-500, this one over here also would have hit full TP. So it doesn't matter which one you would apply, they both will work. But this is how I personally would apply it if I was applying it. I don't apply it, so I can't tell you exactly what the numbers are. But if I was to apply it, this is the way that I would apply it. You can just skip over the bias requirement because you're going to look over bias here in the confluences anyways. You're just basically looking for this and you're going to add the confluence to it. So that's basically how the 3-minute strategy works. Technically, you would take the buy here, but since we already predicted it to lose, we would have just did the opposite and taken a sell. So if there's any other confusion with that iPad, just let me know. I can show you another example, or if there's any specific part here that you don't get, just put down what you're confused with and I can focus on that so that you can understand. But other than that, that's pretty much the 3-minute strategy. Okay, another example, we'll go to yesterday's. So we'll go to the 25th over here. And I'm just going to show you the way that I do it, right? I'm not going to show you the way that John does it. John, he gave his requirements there. He basically just counter trend trades it. I can't show you guys exactly how that's applied because I don't personally apply it. But I mean, if you want to ask John, you're more than welcome to ask John. He's pretty open to helping you and everyone else with identifying these things. So here's the 3-minute from yesterday, right? 3-minute daily again. So we're going to ignore the first requirement because we're going to be looking at the Confluence checklist over here. I forgot what happened here, but I remember John took the okay, I get it now. Because John, he takes the counter trend trade. So for this right here, this would have been a counter trend entry. Basically, what John does is he takes the entry only if it goes against the trend. So like, for example, right here is a buy, but it goes against the trend, right? Because it's red down here. So he actually goes in the opposite direction. That's the same with like the one that happened today. Let me just go back to today's and I'll show you that as well. Because I think that's the thing that everyone's kind of curious about, right? It's like how John applies it, because I don't apply it, so I can't tell you a good way to apply it. But John's over here actually works very well. So let me show you right here real quick. What So the way that John countertrend trades, so see right here how the trend meter is green. Trend meter is green, and this is a green entry, a green buy signal, right? So instead of taking the buy here, he actually takes the opposite. He takes the sell. So that's how he countertrend trades it. It actually looks like it works very well. So maybe that's something I can go back and test at some point. But let me just show you this one over here using the actual strategy. So I think it was like right here. All right, so looking at this right here, we're not going to confirm the bias because we're going to do that for the confluences, but we're basically looking for the first valid K2 momentum signal after market open at 6:30. So market opened right here at 6:30. This is the first valid signal. Looking at the overall bias, I think yesterday the bias was, I can't remember if anyone remembers. I thought it was neutral, but I think it was like bullish, but like it was bullish, but it wasn't a strong bullish. Because I remember the fundamentals were up like, I think like 200 points or something, but the sentiment was basically like 55% or something like that. So it was just neutral overall. So we'll leave that alone for now, and we'll look at this right here, current trend, right? Current trend is bearish. Reason for that is because trend meter is red, and the pivots here are indicating that the red is over the green. So current trend is bearish, so this is going to be crossed out. Looking for a high-low continuation here. That doesn't apply. High-low candle reversal. That doesn't apply. And additional strategy confluence. It does apply here because we have a B3. So with that said, this would be an iffy trade because the confluences don't align with it, right? So you can do one of two things. You can either skip the trade or you can take it in the opposite direction. For me personally, I probably would have skipped the trade because the fundamentals were so strong yesterday. I think they were like pretty high. It was like 200 to 300 points yesterday. So that would have indicated, because that's the only thing that had a strong bias. The technicals here, the trend isn't that strong. Price was actually bullish over here. It just turned red within like, so you can see right here where it crosses over. It crossed over and it's only been red for like 4 candles. So this here doesn't even indicate that it's a strong sell bias. So the current trend is not a strong bias. The retail sentiment wasn't a strong bias. The only thing that was really strong was the fundamentals, which was up like 200 to 300 points or something like that. So with that said, I probably would have just skipped this trade. But if you were to take the opposite way, and depending on like what your TP stop loss would be, see, it would have won. Interesting. Huh. So this here would have won actually. I thought I was going to lose, but this here won. So this is the way that I would have applied it. The reason why I would have taken the opposite here was for the reasons that I just went over on the previous. So does that make sense to you, iPad? I just want to make sure it makes sense. The confluences here. Basically, the entry here was for a buy, but since the confluences here were more for the opposite, let me just go back over here real quick. So the overall bias was like it was like neutral. So this probably wouldn't even apply because it's going to be counterintuitive, right? Because it's just not usable. So if you were to do that, there's no bias there. If there was a bias, whether it was a sell or buy, then yeah, we'd use this. But since there's nothing there, we just would either ignore it or just set it aside. So there's no overall bias. The current trend is not bullish. So this doesn't apply. High-low continuation. There's no high-low continuation here because this is only one low. And looking over here at the additional strategy confluence, there's only one here that applies, like literally just one. It's a V3. But with that said, instead of taking this buy here, I would have just either sat it out or I would have just did the opposite. The reason why I wouldn't take the trade is because there's no confluences. This indicates that this trade's probably going to lose. So instead of taking the buy here, I would have done the opposite and taken the short. If I was to take it, not that I probably wouldn't have taken it because it's just too risky of a move from my perspective, because it just doesn't check off a lot of things on the list. But if you wanted to do the opposite, looks like it would have hit TP right there. So that's how you would apply it. So does that make sense, iPad, or do you need to see another example? So here's Pat's question. Pat said, interestingly enough, yesterday's entry would have been a counter trend entry. Yeah, exactly, Pat. And Pat said, so based on John's setup, he would have entered a buy as a trend was for a sell. I believe so. And he did take the trade. I think what happened was he waited for it because his candle here was too big. Let me see his shadow here. Sorry guys, if you guys send me messages, I haven't looked at anything yet. So I still have a couple of messages here. So John, yeah. So yesterday he did take the buy right here. 632. So he took the breakout here for a sell. He hit his TP, and then he took the buy at 651. So he actually entered like really late. Okay, so he entered when it came back up. So he did what I typically do when I enter a late trade. The reason why he took this trade late right here was because this candle was too big. So if we go back over here, typically when the candle is big, and I've gone over this a lot of times in the chat, the way that you can identify if the candle is too big is if it's bigger than the stop loss. Because when this candle here is huge like this, and the stop loss is smaller than the candle, typically what happens is price will retrace back to the halfway mark, which is going to be somewhere around here, or it's going to retrace back to the stop loss before coming back up, right? So it either retraces there and comes back up, or it will retrace down to the stop loss, trigger it, and then go back up. So what John did with this entry here is because this candle here was too big, he was waiting for the retracement. So he didn't take it right away. He waited for it to pull back a little bit like this. And then when it came back up right here, this is where he made his entry. So he waited for it to pull down, which is just what I showed you guys right here. If this candle is too big, it typically comes back, retraces a little bit, and then it comes back up. And from this point, this is where John made his entry, and he actually hit his TP. So that's how John made his profit right here. As you can see the timestamp, he entered at 651. He took it for 5 lots, locked in 1,095. He entered right here, like literally on this candle when it pushed up, this green one. So his entry happened like way up here. As soon as he entered, he was already pretty much guaranteed profit because it never came back down to draw down. He just let it run, and then he hit his TP there. Or maybe he moved his stop loss in profit, and then it stopped him out in profit because he made 1,095. So that's how he did it. So that's a key thing to keep in mind. This is kind of what screwed me up today, though, because I was trying to do the same thing, right? I was waiting for it to pull back. So if you guys remember from the breakout this morning, I missed the breakout. A lot of you guys took it, and you guys made some pretty savage profits off it. Like, it was a lot of profits you guys made. Like, I was like, dang, I was kind of getting that, I was getting FOMO. I was like, man, everyone here locked in some crazy profits, right? Like I wanted to hop into it like late. I probably could have hopped into it late, but I'm trying to be really disciplined, so that's why I didn't. I make too many mistakes when I'm not disciplined enough. But it was, the entry was like right here, I believe, right? Yeah. So the entry was right here for a buy. Actually, no, it was the opposite. It was for a sell, I believe. All right, let me see what everyone locked in. My bad, I'm like kind of. All right, so from today, it was a sell. Okay, the breakout was actually a sell. So the reason why it was a sell was because of the analysis, right? So like the analysis of the confluences. So technically the trade here was a buy. So looking over here at the breakout strategy, the breakout strategy here was a buy. So look for entry after 630, confirm bias. There was no bias. This is optional, so we would have skipped it, but we would have confirmed it anyways on the Confluence checklist. So basically, we confirm direction momentum. There's a buy signal right here. Then we confirm a strong candle in the direction of momentum. So with that said, there's a strong green candle right there. and that meets the requirements, right? So that meets the requirements right there. And this would technically be the breakout that you could have taken if you wanted to take it in the direction of the actual trade. However, for us, we typically don't do it that way, right? What we do is we look at the Confluence checklist. Let me go back a little bit. Let's move this over. It looks all weird. Okay, so here's the original strategy for the breakout. We have a buy here. This is what the entry is. But what we do next is we look at the Confluence checklist, just what I showed you guys earlier. Overall bias here does not apply, right? So bias was neutral. We ignore that. Looking at the current trend, what is the current trend here? It is bearish, right? I know the trend meter here is green, but you can see that it was bearish and it just turned green off this one candle that pushed up. So with that said, the current trend is technically bearish. It's not bullish. Looking for the high-low continuation. Is there a continuation here? No, right? They overlap. So that's not going to meet. Fourth requirement here, looking for the high-low candle reversal. It doesn't apply there because the low is the red candle. So pretty much nothing here applies aside from the last requirement or last confluence of the additional strategy. And the additional strategy here is going to be the B3 that came up right here because it was a low with a red candle and it was followed by a green candle. So with that said, you have 1 out of 5 confluences that apply. So for me to take this trade is going to be a definite no, because this is just going to indicate that this trade's going to lose. Like I'm already predicting this trade's going to lose. So instead of taking a buy here, I would have taken a sell, but I wouldn't have entered it right away, right? The reason why I wouldn't enter right away is because this candle here is too huge. Like, it's just too big of a candle. So what I did was I would have waited for it to come up like that. You can see price did push up, and I would have waited for it to actually come down to fill. The thing with this is that it came down so fast that I totally missed it. You can see this candle right here. This is where the entry should have been made off this candle. So it pushed down in profit already, and I was already too late. I was like, damn, I can't even enter it because it's already in profit. I would have been in drawdown, or I would have got in at a really bad entry down here. So I didn't even bother to enter it. But it did end up coming down and then hitting. I could have had another opportunity here to pull out. Actually, no, I actually took this trade. Sorry, my guys. No, I'm tripping. I'm thinking about yesterday. I didn't take yesterday's trade, but I did take today's. So when it came down right here, I actually did enter this trade. I'm mixing up today's breakout with yesterday. So when price did come down right here, I actually did enter it, and then it stopped me out in profit. So as price swung back up right here, it pulled me out in profit. And that's how I made my 490 today. Sorry, because I was like, I swear I took the trade today because I did post profits. I didn't take the trade yesterday. So for yesterday's breakout here on the 25th, I didn't take this one because the candle was too big. Wait for the pullback and it just didn't play out how it was supposed to. But yeah, I could have entered again right here as it pulled back down, but I didn't. I could have double dipped into it, but I didn't. But this one ended up hitting full TP right there. It wasn't a smooth move though, so just keep that in mind. When it's not a smooth move like this, it's probably best to just pull out in profit versus, risking taking a loss here. So this is what we took from today. If there's any other questions, guys, feel free to put them in the chat. I don't have anything else lined up here. So unless there's any other questions that you guys have, this session is probably not going to last very long because I pretty much covered the breakout already from today and yesterday. That's basically the main question that people had. If you guys want me to go over more examples, let me know. Just let me know which strategy you want me to look at. If it's just a breakout and you want to focus on that, we can do that. If not, we'll see what we got next. So give me 1 second, guys. I'm gonna grab some water. All right, guys, I'm back. Let's see. Question from Kevin. Kevin's asking if I'm still trading currencies. So currently, I'm not. I'm really just sticking to the daily in the morning. Um, because I don't want to overtrade stuff and I don't want to like take trades and not be able to follow them. So I personally haven't been trading currencies, but I was kind of thinking of getting back into it, but just trading on the 4 hour. So I don't think you're around when I used to call signals, Kevin, but when I used to call signals, I would just trade I would trade the 4 hour K2SR strategy, and that strategy worked pretty well. So I think, well, I was thinking about maybe doing it again. Um, and I'll show you guys a strategy here. A lot of you guys weren't around back when I was calling strategies. A lot of you guys are actually kind of new. So you guys weren't present when I used to call signals. I used to call signals a lot and they did hit pretty often. The reason why I stopped calling signals is because people would join the K2 group and then they would just steal my signals and then just repost them in their own group. Like there was like literally other signal companies. They would like pay to join K2 and they would just steal my signals and then post them as theirs. And it just got really annoying. So I was just like, I don't want to do signals anymore because everyone was just taking credit for my trades. But this strategy actually works really well. So if you guys remembered it, for whoever's been part of the group in a while, it's a super simple strategy. But now that we have these other tools, there's a lot more opportunity. Like for example, using the sentiment over here. The sentiment is like one of the biggest things where I'm like, okay, I could use this because before we didn't really have a direction of like where to trade. We were kind of just following the momentum signals. But now that we have sentiment here, like for example, I look at like OJPY. Since it's 69% short, I would just be looking for buys. So if I go to OJPY over here, so say for example, since I'm just looking for buys here, I'll show you how I would have applied this strategy here. Let me see if there's any entries that could have been taken. So let me just go over here real quick. So I'm going to go ahead and draw the K2SRs. Or I'm just going to draw the ones that I'm actually going to be using because we don't really need crazy amount. Let's not use this tool. I think a lot of you guys still apply the strategy too, because back when you called when I used to call trades like this strategy worked pretty well. So I'm kind of tempted to come back now that we have a better idea as to like how it's been moving and whatnot. So basically you draw the K2SRs, you have these zones drawn up in the chart. And let me just show you guys how it works, like basically for the new people here. So I think I have the requirements here for the K2SRs. Yeah, so here's the requirements. I mean, the requirements are super simple. It's like, and this is on the 4 hour time frame, so it's actually a lot easier to take. So first you want to confirm a breaking close past the K2SR zone. Looking at this candle right here, you can see this green candle right here is breaking and closing past the K2SR zone, right? So with that said, you would confirm the direction. You have it breaking above here. Look back at the previous momentum. We have a buy signal. So we already identified that price is likely to keep pushing up, right? So with that said, you would enter on the following candle right here, basically enter a long position, and then you basically ride this to the next zone. So your TP stop loss is for like a 1-to-1. And then once you have that right there confirmed, you can see the next move here, pushes up higher, and then hits full TP. So that's going to be one entry. And then you just wait for it to break and close again past it. You can see price right here broken, or it shot below it. However, the momentum here is still bullish. So you're not looking for any sells, you're looking for buys still. And then now if price continues to push up higher, you can see your price pushed above here, but it hasn't closed. This next candle right here hasn't closed above it either. And this next one right here does close. So with that said, we have another entry, right? We have a breaking close past this K2SR zone. We have a bullish momentum. What do you do here? Same thing, you enter a long position. You pretty much ride this to the next zone right there. Basically 470 pips. You have that set up, you let it run, and same thing, full TP again right there. Since we have the bias, you know exactly which direction to trade. You're just looking for buys. Pushes up again right here. You pretty much wait for the same thing. Okay, same thing again right there, right? It's the same exact kind. This is like one of the easiest strategies to apply. It's just really patience because it's on the 4 hour, so it doesn't happen very often. But when it does, like for example, you had one entry right here. After this hit TP, you didn't have another entry for like a day and 8 hours. After this one right here hit full TP, you didn't have another trade for like 5 days because it went into the weekend. Finally right here, another entry, and then you literally just keep doing the same thing over and over and over again. It's such a simple strategy. And this is a strategy that I used to use when I used to call signals. Like this was the only strategy I would apply, and it would work really well. And it still does work really well. I just haven't really looked at it. So again, right here, you go for about 62 pips or whatever. You let that run. And again, another full TP. So you guys can see how lucrative this strategy could be. And this is why our signals were so accurate, because I would just keep calling signals. Now that I have the bias requirement, this is actually even better. But the problem with this here is that we would trade it in both directions. So I think there's another one right here. But the problem with this is that we don't have another K2SR above there. Let me check real quick. So there's no K2SR above here. Typically, if you don't have something above there, you go on the higher time frame. So nothing on the 4 hour, you go to the 8 hour. Nothing on the 8 hour, you go to the daily. You go to the daily, nothing on the daily, you go to the weekly. So you have no other highs here, right? It's like at this highest point. So at this point, you would just go to, you just wouldn't take the trade. You just skip it at that point. So even though there's an entry right here, I mean, technically you could take it if you really, really wanted to, but in this instance, I would have just skipped it. So you can see it pushes up another point. As it continues to drop below, you can see that now that you have a sell signal, you can now take sells. And we would just pretty much ride this. It's basically zone to zone trading. Like you guys have probably heard zone trading, or like that's what people call it, zone trading. That's like their strategy name. It's the same thing. It's just that they don't have the K2SR indicator. This indicator pretty much was the game changer for us. Once I created this indicator, we were able to identify these zones super easily, because a lot of people don't know where to identify these zones. Again, right here, we have another entry. You can see we have a sell signal, price broken, close below it. And you do the same thing in the opposite direction. Again, right here, you're gonna go for like 36 pips. Goes down a little bit, stop loss here right there. So see this right here, we would have taken the stop loss because we didn't have the bias requirement. Now that we have the bias requirement right here for RJPY, now I would know to not take any sells. I'm like, all right, I'm not going to take these sells, so I would have skipped this loss. But this would have been okay, because back then when we applied the strategy, basically these were all 1-to-1 risk to reward, right? So if you won 3 trades and you lost 1, wouldn't matter because you're still in profit. You have 2 trades here that's still in profit. So you would have just skipped it since there's no bias. And then let's just look for buys in this case, because we're not looking for sells. Let's see if price does push back up. All right, so price does push back up right here, but there's no buy signal, so no trade. Here goes price pushes higher. Okay, here's an example of a buy, right? Price broken, close above it. We have a buy signal right here. Long position right here. Pretty much ride that to the next zone. It's a small move, like 300 or 35 pips. This one gets stop loss too. So it just depends on like which, I'm trying to think which direction to be trading. I just realized that this is like on June 20th. So this was like a month ago. So I don't think the bias was actually this goes and set to this at that time. Because that's a month ago. This bias was probably different about a month ago. So let's go to something recent. Let's go back. Okay, so these here would probably not apply because the bias was probably different on those days. But I'm pretty sure like right here, the more recent trades, this is where the bias was still aligned with it. I know it's at 69%. You typically want it to be more than 70. So I think someone else asked for that. Yeah, PC asked for it. He said, for bias, you're looking for retail sentiment at 70. Yeah, typically you want it to be around 70. We're in the summer right now though, so you're not going to really find it at 70, right? It's going to be hard to find it. There's one right here actually, GU. There's a couple here that are fine, like Euro CHF, GU, silver. I think those are the main ones. But this one's close enough. AJ is like at 69. It's like off by 1%. But using this as an example, so this was a week ago on July 12th. So on July 12th, right here, you can see that price breaks and closes past the K2SR zone. We have the buy signal right there confirming bullish momentum. You take this for a long position right there, right into this next zone for 62 pips. And full TP right there. So I might start taking these trades again, but I'm just going to set and forget them. I'm not going to adjust TP or anything like that. If I see something come up, I'll just take it and I'll let it run. Long position right there. 55 pips. Pushes back up, full TP. So as you guys can see, it works very well. If you have a bias, you're just looking for buys here. What's another one here? I think GU was one, right? GU was like 71% bullish. So if you go to GBP USD, K2SR. So you'd be looking for sells here. So pretty much same thing. Real quick. Let's see, we have one right there. The main problem with the strategy is when the zones are too close. Because if they're too close, like how they are here for GU, you can't even take the trade. Yeah, there'd be like no trades for you to take here because everything's so close. I mean, if you were micro scalping, then you can maybe lock in profits, but I don't think it'd be worth the risk. So I'll turn this off real quick. Yeah, there's not enough space here. Looks like you'd have an entry right here. Actually, this could be an okay entry. This one right here. Yeah, just this one right here, I think. This one and this one. There's like two entries here. So there's one right here. You have a sell signal there. Price is breaking, closing below this K2SR zone. If you were to take a short position right here, I guess you can take it for maybe like 30 pips or so. I don't trade, well, I haven't traded this in a while, so I don't know what the numbers are like. But if you were to taking this for about like 34, 35 pips or something like that, which is fine. I mean, if you're taking this with the like a one standard lot, you make about 347 profit off this. And then again, as price pushes up, it provides for another entry. Not that there. Still looking for a sell signal because we can't take these unless we have a sell. Okay, so again, right here, another entry. Short position right there. TP is a bit tighter. About 28.2. You would take that full TP again right there. So two full TPs right here if you were to apply GU with bias, you know, which direction to trade in. And it looks pretty solid. So that's just a refresher on like how the K2SR strategy works. If you guys want to watch the video of like how that's applied, it's on the website. Everything is on the website. So all these strategies that I'm going over with you guys that I've applied or that I still apply, they're all in the course. So let me see if I can pull it up for you. It's probably on the lower end, so you probably don't see it if you don't scroll down far enough. But so let me see. Pull this up over here. Okay, so this is what the course looks like if you guys are not familiar with it. If you scroll down far enough, the strategy is still there. Okay, it's right here. K2SR zone trading strategy. You can do it for intraday or swing. I do it on the 4 hours, so that's basically intraday / swing. It's basically a set and forget strategy and works pretty often. So that's one that I would apply if I was to trade intraday. Question from PC, he's asking what pairs do you apply these to? So if you go over here to the course, guys, just go to the my watch list right here, right? The K2 watch list. If you click on this right here, it shows you all the pairs that I would trade. So all the Forex pairs are right here. Like literally the entire watch list that I trade is on here. If you want to download it, just click this K2 watch list and then go to trading view, and then you'll just import. You'll go over here to your watch list, and then you'll go to plus, or not plus, where's the button at? Go to watch list right here, drop down, and then just import list. And then you can just install my list onto yours, and you'll have your list looking exactly like mine right here. That's how you figure out which pairs to draw. And the way that I found out these pairs is because I traded all of them to figure out what has the tightest spread. So like the easiest trades to get in and out of, so you don't get caught in spread. If you trade something like an exotic pair, you're going to have like 100 pip spread. It's going to be impossible for you to get out of the trade. So although I don't personally trade exotic pairs, there was a lot of people in K2 who did trade exotic pairs, and it actually worked very well. So I think one of the main ones here that I did apply sometimes was USD SGD, which is US dollar to the Singapore dollar. That's one that I would apply. Other than that, I think that was the only exotic pair that I was really trading. I mean, I guess it would still be considered a major, not necessarily a major pair, but it's paired with the US. So I guess it would fall under US pair or major pairs. It's a pair that's not traded very often. But I mean, just looking at it right here, if I turn on the K2SR, there's probably a lot of entries here that hit. Yeah, I mean, there's a whole bunch. There's like a big one right here. Depending on like if you took this, we used to take these trades and they would always hit. Like there were such good strategies to apply. Like for example, right here, and you could the cool thing about the strategy is that you can you don't really have to use a one-to-one. Oh, let me go back real quick. Like you can use a or play into here. You can just put your stop loss below the previous zone. So instead of like doing a one-to-one, you could do something like this where your stop loss is below here, and then you ride this up to this point. So that's like basically a 2-to-1, right? Because you're already anticipating it to hit the next zone. So if we take this here from USD SGD, let it run, you guys can see that these trades last a long time. Like this isn't going to hit your TP like by tomorrow. It might hit it like 2 or 3 days. There was this one time, it was crazy. We took this one trade when I called the signal a long time ago. It was like last summer. These conditions suck in the summer, right? To start in July. We held this trade for like almost a month, like literally almost a month, and then it finally hit full TP. And it was like a 40 pip move. Like it was like the worst trade ever. I think not the worst trade, but it was like it put everybody on edge because it kept, I think it was Euro CHF. Let me see if I can find it here in the history. I can't remember like when we took it. Some of you guys would probably remember it because we were like, we held on to that trade for like forever. I think I like finally hit. Oh, it was odd CHF. Okay, so this trade right here, like, dude, this trade ran forever. Like, we held this trade for like a whole month. You can see right here, we were holding it from like June 22nd all the way until July 17th almost. But it did hit TP. You guys can see here, it did hit TP. It took forever. Like, it literally, and people were getting so stressed out because it would push in profit. It would get really close to your stop loss. And it came back and it just ranged forever before it finally hit TP. And that trade was yeah, this trade lasted forever. This is when I used to call signals. You guys can see the signals here. I used to call signals a lot. My signals were pretty accurate. So if you guys want to apply this strategy, this was literally the only strategy I used for the signals, and our signal results like were really good. Like, if you guys remember, see where the, so these are just Forex signals, like literally no US 30, just Forex. We were up like a lot, like 314 wins, 100 losses, up 11,000 pips, right? It's a lot of pips. Like, you think about that times $10, because I was trading like the standard lot. This is like 100K right here in profit. Yeah, right there, like 111K. And this was like middle of the year. So if you guys want to trade Forex, I think this would be a great strategy for you guys to apply. I mean, I'll probably start applying it myself too. But I'm going to be using the bias as one of my requirements. So these are good trades to just set and forget if you want to trade them. And this strategy works all year round. It's just during the summer, you're going to be holding on to these trades for a long time, because it's a lot of times it doesn't, the market will just never, it'll just never hit your TP, and it'll just take forever before it reaches that point. So let me scroll up real quick. Another question from PC. PC said, for FTMO and to save tax by forming an LLC, should the FTMO account have to be in the name of the LLC in order to benefit? No, they don't, PC. You're just going to be depositing, or you're going to be having FTMO pay your payout to your business bank account. So it doesn't have to have a name. I mean, you will end up putting your name there though. I don't think it's really necessary, but they give you the option. So once you get funded, they'll ask you, is this for a business or is this for personal? I said it was for a business, and then I just gave them my business bank account. That's pretty much it. But I don't think it's necessary, because the thing is, either way, if the money goes into your business bank account, it's gonna fall under your business, right? If it goes in your personal bank account, then no, it's not going to fall under business. But if you just have it direct deposited or wired or bank transfer, whatever your choice is, payment, as long as you send it to your bank account, it should be fine. And yeah, you need to send out. Yeah, PC said, okay, so I guess I need to set up a business account. Yeah, you got to have a business account, because if you don't have a business account, you don't have a business, right? If it's personal, then it's personal. Business. So, but you don't have to. So, like, if you're not ready to do it yet, you're not really at that point, you can always just trade on your personal account, or you could send it to yourself. Once you're ready, you can, there's no time limit for you to start a business. You can start a business any time of the year. If you want to start it on December 30th, last day of the year, you can do that. You just won't be able to reap the benefits of having a business account, right? But this is something you should talk to with your CPA. Just, I mean, you're gonna have to give them details though, because your CPA is probably not going to know what you're talking about. But I mean, you're basically doing a service for FTMO. You're trading for them, so you're basically trading, or you're exchanging your skill with trading for the profit that they pay you, but you're not necessarily trading their account, because it's a demo account, right? They just pay you what the account makes. So yeah, I mean, you start a business account, it just depends on where you're located, PC. So make sure that you're checking all the rules for your state. Like, I'm not even sure you're located. If you're in the US or if you're in the UK or Australia, there's a lot of people in K2 from different places. So I have no idea where you're from. But if you want to look up stuff, okay, you're in North Carolina. Yeah, it would be best to, you don't really have to have like a really good tax person. You just have to know somebody that knows what they're doing, because it's not going to affect you yet until you start making a lot of money. That's like the mistake that I did. I kind of used some shady tax people in the beginning, and then I got hit with some fat tax bills. Like, years later. Like today, I'm still paying back taxes. It's crazy. I get like letters from the IRS where they were like, "Oh, you owe back taxes from like 2020." I'm like, "What the hell?" Um, so I had to pay back taxes for 2020, back taxes for 2021. This year I got a better tax guy, so hopefully I don't have to pay any back taxes this year. I'm paying a lot of upfront taxes. So instead of me like skipping taxes, I'm or not skipping taxes, but like basically prolonging it. I'm paying taxes ahead of time. So I'm hoping I don't get hit with anything this year. But if you're not making like a crazy amount yet, then it's not a big deal. Like once you start making like over 100,000 or 100,000 is not even that much. If you start making like over 400,000 or even 300,000, that's where you definitely want to have things on point. So like thankfully my back taxes weren't that crazy for the past couple of years, but this year it's going to be, because every year I just keep getting better at trading. So I just start to make more and more money from trading. And that's when you need a good tax person. But don't stress on it too much, PC. If you're not anticipating to make more than 100K, then and it's fine. It's a long-term process. Like this is probably your building year, right? This is your year to get better at trading so that by next year you can just take off. That's like how it was for me. I was kind of like whatever with you. Like when K2 started, I wasn't like the best trader. Like in 2018 or 2019, I started to get really good like 2020, and then from there, it just took off. Yeah, Kevin said I do the same thing. I pay taxes ahead because my tax liability from trading is ridiculous. Yeah, I know, Kevin, it sucks. I have to pay quarterly, so I pay my taxes ahead of time, and I set aside like I pay the IRS basically money ahead of time, so it's like they see the money there, so they're not like, okay, I wasn't planning ahead. So you just got to find like a good tax planner. And I had to pay myself more too, because like myself as the CEO of K2, right? Like for my trading account, I'm basically the CEO of the company. I was paying myself like very little. I was paying myself like 50K a year. But my tax account was like, no, you got to pay yourself like way more because it looks so suspicious. So I started this year, I'm paying myself like 150. So it's a big difference. And then I got to pay taxes on that basically employee tax or whatever, self-employment, or I don't know what it is, but yeah, when you start to make more money, you just got to start paying yourself more. There's going to be loopholes and yeah, payroll taxes. Thanks, Kevin. That's what it is. Dude, my payroll taxes are crazy. I'm like, every time I see the number, I'm like, damn, that money's like it's going nowhere, but it's going to count as a tax write-off. So technically it is going somewhere, even though I'm kind of like burning money by paying myself more. It's going to come up as a tax write-off. So it's kind of like a double whammy. Basically throwing money away, but throwing that money away, you're also getting a tax deduction. You guys will figure it out eventually. Yeah, when you start making more from trading, it's all part of the game, right? It's like learning the money game. Learning the money games through trading, and then once you learn the money game, you learn the tax game so that you can keep the money. Because it's not really how much you make, it's how much you keep, right? Because you can make like 100K a year from trading, but if you're paying half of that in taxes, then did you really make money? Not really, right? You gotta know how to make the money, and you also have to know how to keep it by finding these tax loopholes and stuff to keep your money. Like my car, right? Like I just bought my Porsche Taycan. I bought that car is like over 200K. That car is my business vehicle, so that's there's something that can be used for that. So I didn't technically get the car for like the money's not going to waste buying a car like that. It's coming off as a tax deduction because it's like my business vehicle. And that's why you see people drive like, certain cars around. Like you see people drive like G-Wagons around because those are like full write-offs. It's the whole reason why I got my Tesla Model X. It's section, I forgot what the number is, section 179. I think it's still going on, right? Let's see. Hopefully it's still going on because my Taycan it falls under section 79 and pretty much write off the entire car. So this is one of the tax loopholes you can use once you start to make like a lot of money from trading. Basically, if you have a business vehicle and it's over like six, and this is not tax advice, guys, right? I'm just telling you guys what I know, but the this is something that you can use if you end up getting a certain vehicle that falls under Section 179. I don't know if it's different now. It's probably changed a bit. This was a Trump law. It's called the Hummer tax, right? It's called the Hummer tax because Trump created this law so that his, rich friends could buy expensive vehicles like, Hummers. That's why they call it the Hummer tax. If you could get a huge SUV, so that his buddies can pretty much write off their cars, like a decked out Escalade or something, a bulletproof Escalade, right? And they add all these things to the car, it becomes a write off. So, yeah, PC, you'd have to like meet with your like a CPA that knows what they're talking about and they know like their way around the tax book or the tax laws so that you can maximize your tax deductions. But if you're not making a certain amount, then it's not a big deal yet. When you start to make a lot more, that's when it's going to become a big deal because you're going to have to pay a lot of taxes. So yeah, no, definitely. PC said that's good to know. Just starting out, so I guess thinking ahead, and that's good. For me, I didn't think ahead. I kind of just jumped into it, and then I figured out things along the way. There's a tax book in the chat here too. If you guys want to look at it, just go to the Premium Trade Talk, type in tax. I don't know what the book was. Tax-free wealth. This is like the first tax book I read. So if you just go to the Premium Trade Talk, go to the search, type in tax-free wealth. I posted the book right here. So you can read this book. It pretty much gives you a rundown of like how to maximize your tax gains and avoid paying any taxes at all, really, in retrospective. Pretty much Trump style, right? But there's a lot of different ways to do it. There's just check out that book if you guys have no experience with tax, or just go on YouTube. Like what I do, like during my free time, is I go on YouTube and I just search up tax stuff. There's a lot of videos out there, good information that'll help you understand things. So, oh yeah, Deswell said he has an offshore account. Yeah, I got to get me one of those too. Deswell said I need a good tax lawyer, Sean. Yeah, the good tax lawyers are hard to come by. Deswell, I'm probably gonna need one eventually too. Actually, I do know one guy. He's like one of my tax guys as well. I'll give him a little shout out now, Mark J Kohler. So if you go on YouTube, search up Mark J Kohler. This guy is really good. He has a lot of books. He has workshops. I have his whole like course and stuff. And the thing with him is he's like a tax specialist, but he's also a tax lawyer. So like if this guy does your taxes, like his firm, if you ever get audited, like his firm will defend you. But his stuff is expensive. If you want to use this guy, I pay a lot to use this guy. So you got to be making a certain amount of money to use this guy for your taxes. But he's good. Like it's worth the money if you guys can afford it. Because you got to pay him hourly. So I think it's for his firm, it's like, I don't know, like 500 an hour, I think, but it's worth the time because the thing is, if you could save X amount of money in taxes, that $500 goes a long way, or that couple thousand bucks goes a long way. So I think that's about it. You guys have any other questions? We went off topic like for the last 30 minutes. So if you guys have any questions, feel free to let me know. Otherwise, we'll be wrapping this up. We've been on the session for a little bit over an hour. So I'm here to help you guys if you guys have anything, but if not, we'll just wrap this up and then we'll pick back up tomorrow for the next live session. Yeah, I'll hang around for a couple minutes if you guys have anything to put in the chat. If not, then we'll wrap this up and push through with the rest of the trading week. Tomorrow's Thursdays, or no, tomorrow's only Wednesday. Damn, it's crazy. I thought it was Thursday already. Tomorrow's only Wednesday, so we still have about 3 days to trade. So we got a lot of time to trade this week. No need to take any unnecessary risks. Kevin's asking, Sean, did you buy the eBay screens for your laptop? Not yet. So I was looking at that. Look up again, actually. eBay tri-screen. There we go. Yeah, no, I haven't gotten it yet, but it's pretty cool. This is a thing that Kevin showed me. I'm curious how bright is the screen? Is the screen pretty bright, Kevin? Because the other screen that I have, the screen's like the brightness sucks. I like need it to be like pretty bright. Looks like it's okay though. So I might need to buy this soon because I am going to Hawaii in like 2 weeks. So I'll be in Hawaii for like a whole week, guys. I'll be trading from Hawaii. So I will be bringing my laptop and probably the screen. So I'll be in Hawaii in 2 weeks. I'll be trading with you guys there, and then I'll be in Cabo in another 2 weeks after that. I'm traveling a lot this month. So I'll be in Cabo and Hawaii, and I'll be trading with you guys. So I might buy this. Let me see. Shop price screen. 2 days shipping. It's not that bad either. It's only $500. So this again right here would be a write-off if you guys were to buy this for your trading. Okay, perfect. Yeah. So Kevin said he likes bright screens as well. That's perfect, dude. I think brightness is really key. I forgot which one I have right now, but the brightness sucks. I can't see anything. That's how I took those accidental trades on Friday. Thankfully, it didn't. I didn't lose anything. I was still positive. Okay, cool. Yeah, this is perfect. This would be cool because I could have the chat over here, like how I normally have, and I'll have MC4 over here. I'm just wondering if this would fit on my screen because I have like the new MacBook. I don't think it would matter. It would just kind of be sticking off the end. Well, cool. Yeah, thanks for reminding me, Kevin. I'm actually gonna buy this right now. So, all right, guys, I think that's it for this session. If you guys have any other questions, feel free to email me or message me on Telegram. Otherwise, I'll be back here tomorrow for the next live session, same time, same place, 6:30 a.m. Pacific time, for us to take the next breakout. So hopefully you guys got the help that you guys needed. If not, it's okay. I have these mentoring sessions weekly, so we're gonna have this again next week. I think on Monday, I believe. Check the calendar real quick. Yeah, I don't have anything on Monday, so I will be having the next mentoring session on Monday, August 1st. Oh, cool. Okay, perfect, Kevin. So use it with a 17-inch laptop. I think it should be fine with mine too then. But all right, guys, I'll see you guys tomorrow for the next live session. If you guys have any questions, just reach out or put your questions in the Telegram. Otherwise, I'll see you guys tomorrow morning for our next day of trading.